Alright, what's going on, guys? We're going to be going over a couple trade recaps. Those being ENPH, TSLA, and yeah. So, these are my two top primary focuses for the week. I want to go over these real quick and talk about like what I've been seeing. So, whenever you look at this chart, you're going to say, "Oh, okay, we have a heavy volume gap up." Every time you want to look at a chart, you want to talk about the heavy volume spots. Those being over here, right? That was probably an OPEX date. That was December OPEX, so I don't necessarily count OPEX ranges as spots that but like this is a really heavy volume gap up, right? And then you get the subsequent sell. Do you see any alarming volume in here? No, you don't. All you really see is a gap up and a push back into resistance off that gap up. And then from there, what do you get? You get lower high, lower high, lower high, lower high, lower high. Right, so whenever you're looking at this in live time, you're like, okay, so we have a gap up and the continuation after. That's a little bit premature. Every single time that I talk about a campaign, I talk about premature campaigns where you get a PEG, let's say for example, and that whole entire PEG is just premature. So what I mean by that is there was no lower low from the gap up that we actually made, right? So whenever you're looking at this that's our first spot. This is not a lower low. That's a higher low up here. And then from there, lower high, lower high, lower high, lower high. And then we start rating lower high resistance. So let's take a look at, okay, here's our resistance. It's lower high resistance. And then from there, what happens is we fill the gap. So anytime you see large heavy money intention behind a heavy volume gap up, so what I mean by that is this is a 17% move on the underlying for the day. And then from there, what I'd like to talk about is like stocks. What they like to do is they like to mature in campaigns. This is a premature breakout after such a heavy volume move up and then an extension away from the gap up. Likely what's going to happen is buyers, what they typically like to do is when you're getting a move up, really heavy volume, and then you get really no retest or higher low, and then you continue your way back up into resistance with the stem of the higher low being little drying up volume and back into a resistance and such a bottomed name to the point where the campaign has to carry out now with lower low, lower high, lower low, lower high, lower low, and then the spread will tighten within the overall range, and then you'll start getting that expansion. This expansion should be on heavier volume, and then the continuation with a lower high off of that expansion candle, right? So whenever we look at this and we say, there's a lot of intention behind this move, right? There's a lot of volume, and then you get your premature campaign where you break out from that high volume candle into a resistance, and then from there you start rejecting relatively low volume, nothing too crazy, and you get a heavy volume gap up, and then a failure, lower high, and you start failing. Now you're in the new bull gap, because whenever you're looking at this whole entire chart, this is the wider perspective of intention here, guys. So whenever you're looking at this and you're going, oh my gosh, big money wants to move this up, we see a ton of volume. Well, beneath this low is where the volume was moving this up from, because this is the new trading range, and you get your breakaway trend, and you make a higher low from the earnings candle, and then you put in the lower high. So typically, within this overall range for the time being, we have to move lower, right? So whenever you're looking at this from like a bar by bar perspective, this is the earnings candle with where the heavy intention is behind, considering the volume, considering how beaten down this name is, considering the negative sentiment and the gap downs followed by the recovery, the explosive recovery back into like a resistance, a support, turn resistance failure, and then we find a higher low, and then higher low, and then we gap up off that higher low with really heavy volume behind it. And then you get your subsequent sell and lower volume. That goes to show you that this is the overall perspective and intention behind this whole entire chart, is that this is going to start building out, like I said. Here's your major gap up, ton of volume, and then you get your higher low and then higher high. That higher high fails, and you're looking for now potentially a new low, because this whole entire range where we moved up failed a higher high, and now we're moving into a lower low territory. So whenever you find lower high, you're looking for a lower low, and then you're looking for a lower high, lower low, and you're basically looking for incremental lower highs and lower lows within the power earnings gap, all the way until you fill the earnings gap itself, or find discount, or find the golden pocket, or find a level. But typically the fill is going to be the best spot. And then whenever you start finding, like I said, you're putting in lower lows, those lower lows should typically find a pop into a lower high, and then the lower high should sell it off. And then whenever you find the bottom of a big time progressive spot from a very heavy volume move higher, you should be looking for now a pop on nice volume and then a higher low. So something that looks like this, right? And then that's where you can look for your risk to be in a spot where, okay, we reclaimed a previous support, where, okay, here's your previous support. We're finding now displacement off that previous support, and then a claim of it, a retest of it, and then a higher low off of it, with this being the heavy volume move off of like where the gap starts, maybe like being right over here at 118.50. Okay, so that's kind of how we talk about progression and heavy intention behind charts. This gray box with how heavy volume gap up we got from earnings is going to be the spot where, okay, if we trickle down to this spot and we put in lower lows within this spot from the earnings candle, so earnings candle, lower low, what do we start finding after we fill the gap is now lower low, and then higher low within the channel itself right over here, and then higher low, and then higher low. So people talk about how confusing this is. It's really not that hard, man. It's not that hard. You just have to have the patience. So every time you're looking at this chart, you can go, oh my gosh, okay, we put in 3 higher lows. Now we're looking for the expansion. And then whenever you start finding that false breakout bar, that's whenever you start cutting your exposure and start looking for where the higher low would be within the confines of this range in the gray box. So when we're looking at this, you can go, oh my gosh, okay. Now we would dive into the shorter time frame relative daily chart and start looking for the heavy volume spots. So whenever you start finding, okay, we have a previous support established here, we reclaim it with a heavy volume hammer, you gap up, you start finding your sell, and then another hammer candle, and then another gap up. This gap up is on pretty nice volume. And then from there, you start trickling back down into the gap that you did create. Okay. So that gap being down here, if you want to look at it from like a high day perspective, you can, or the closing print. You can take the high days perspective, and then you start finding a buyer. The next heavy volume move was back to the upside, followed by a false breakout of internal resistance. So this is all just simply building a campaign of lower high, lower high, lower high, lower high. Now we're looking for another lower high. That lower high, though, what is this lower high doing from all the other previous lower highs? It's raiding a resistance, right? So if you find a higher low after a lower high, that raided resistance followed by buyer dominant volume patterns with heavy volume candles, lower low into a bull gap, and then the heavy volume earnings gap up. Likely what's going to happen if they can't break the structure of lower highs, meaning this, then what's going to happen is you're going to see, okay, a sell, and then a retest, and then a sell further, right? But we never saw that. We just saw incremental lower high, higher low, higher low, higher low, and higher low. Now, what is the significance behind these higher lows? So, if you take this out of the... Okay, so we filled primarily most of the gap, and then we got a heavy volume gap up at rate of resistance, and then it saw the really low volume subsequent move into the bottom of a bull gap, where the bull gap was heavy volume. So relative to the chart, within the past 2 weeks, this is heavy volume, followed by low volume, and this is just lower high, building a campaign of lower high, lower high, lower high, lower high, lower high, and then a rate of resistance followed by technically like a lower high from this high. But it's on really low volume, and the overall perspective of this whole entire range right here is just filling a bull gap on the highest volume candle that we've had within how many days? From here to here. 108 days. Right? So whenever you're looking at this from a price covered over time perspective, this was a move of 47% in 10 days. This was a move of 22% in 96 days. So you can see the difference of seller progression versus buyer progression, followed by higher lows, followed by lower lows that have been bid, meaning every single time you make a lower low beneath this low right here, you're getting a buyer that pushes this back into a lower high, and then the secondary lower low from this low now, meaning a new low, is into the bottom of the bull gap, followed by another buyer, heavy volume hammer, followed by, like I said, higher lows afterwards, into expansion off of this lower high structure, from stemming all from the heavier intention, heavier volume gap up that never got retested. This was all a premature campaign from here. And then once we started building the real campaign, it was established over here. So real campaign from buy side is the yellow. Premature campaign from buy side is the gray. So that's kind of how you dictate where price is going to move and how to adjust where to look for the higher lows from, based off of the fill, based off of seeing the effort placed by buyers off of these hammer candles, followed by higher low hammers, followed by gap ups on heavy volume. Goes to show you the premature campaign versus the campaign where that same intention from over here is being revealed from spots over here. So that's basically how we see the ENPH chart. Now if we go into intraday execution, we could start looking at, okay, this is our SED range, right? It looks like some sort of flag. Okay, so let's delete all of this stuff. Okay, so lower high, lower high, lower high, and then a potential lower high, but that lower high rated the resistance, and it got a false breakout, so this is technically an internal based range false breakout, and then we push back lower. But where are we pushing back lower into? I don't care about this false breakout. Maybe for the time being, never catching a fill there. I would never catch a fill on that candle, but where would I catch a fill? On the heavy volume spots, right? So whenever you're looking at this and you're going, oh my gosh, okay, here's the heavy volume spot where we're getting heavy volume intention off of this gap up relative to the rest of the chart. This is a heavy volume gap up followed by a false breakout and a really low volume sell back into the bottom of the gap. Also in confluence with potentially a higher low, where a higher low off of where? The bottom of where we filled the heaviest volume bull gap in how many days? 100 and something days. So sellers got to be getting tired here because they're incrementally bidding this at new lower lows from the earnings gap into the bottom of the earnings gap, and then the secondary lower low is being bid up with a heavy volume hammer candle, and then we start pushing into the bottom of the earnings candle. We start failing it, but then we start getting higher lows after, heavy volume gap up subsequently, and then a hold of those heavy volume gap ups followed by expansion off of those spots. Let's go to the hourly now. Okay, so this was a quick bleed, but we're looking for a higher low in the daily. So this is the heavy volume move, right? Expansion, and then created a resistance, fell beneath that resistance, filled most of this imbalance. These are imbalanced candles. If you're going to look at the regular trading hours, go ahead. And then from there, we started finding the higher low and then the gap up, followed by, does this portion of this move, from a progressive standpoint, look like it's covering any distance, any price to crack the higher lows? Higher low, higher low, higher low, and higher low. These are all higher lows from this spot? No. Right? And then we finally get that expansion and that move all the way up to this resistance, a resistance that was never tested. This was all false breakout and a lower high. No supply in between the confines of this lower high, false breakout, into the bottom where we would find another lower high off the overnight gap. We started to find a buyer there, right? So we got the immediate sell after, and then the relief, and then the sell, looking for a lower high intraday, and then trying to buy it. And then the next following day, what happens is we trickle back down, never crack the previous low a day. We kind of just base there. All off this bull gap where the heavier volume was hitting from. Then we start getting the expansion. So where's the wider perspective of intention happening on the chart? This is all just sell side mitigation where, oh, okay, we made a heavy volume gap up, but this is the subsequent sell on really low volume back into a higher low spot that we could potentially be creating all the way down from the stem of the campaign, coming off of the heavier intention volume all the way stemming back from the earnings report itself. That's basically all that really matters, guys. That was the ENPH thesis, and I started eyeing calls on this day, Tuesday, and then I took them into the open on Wednesday because I wanted to see a strong close. I never got a strong close, so I cut them, and then the next following day we opened in the same spot. We started looking like we had a really strong tape. We started seeing the expansion right off the bat, followed by increasing volume pushes. I took calls immediately at like 112.50 probably, and then we took and rode this all the way up to 124. So that's a 12-point move in like 2 hours, 3 hours. Really nice trade. So let's go over to Tesla now. And then we'll talk about JP Morgan. So Tesla was a really nice chart because, first of all, this is all negative sentiment saturation. So anytime I see an underperformer and I see it's creating lower high, and then immediate bleed into the bottom of like a bull gap, and then that bull gap starts finding a buyer, and that buyer is on really heavy volume, meaning an earnings report. And then subsequently, what do we get? A reclaim of resistance, a really nice move. This move was 5% on the underlying for the day, the following day, and then we get a base here. And what this base is doing is eliminating supply from the previous resistance. So anytime you look at like a campaign of sell-side campaign, and you look at lower high, and lower high, there's going to be leftover excess supply off a spot like this. So you would want to be a little bit risk off into a pullback where you can look for a long off of the support, or start pulling your discount, or start looking at like imbalances or discount from the previous day to the current high day on this day. But this consolidated and then saw record high volume the following day off of a news report, and it gapped up and moved 15% on the underlying for the day. This all just retested a previous swing low, a previous resistance, turning to support. And what it did was it filled most of this bar by bar imbalance. So whenever you're looking at like bar by bar imbalance, you could say, oh my gosh, okay, here's a heavy spread candle where it's filling most of this. That's a premature campaign, just like I talked about in ENPH. So you're going to find the sell off the sell side imbalance candle. That's going to come off of like this bear progression. Once you lose it, find a lower high off of it, and then you're going to move your way lower, right? But where are you going to move your way lower into? Well, we put in a higher low attempt, but that's very shallow. That's a premature campaign for the buy side. And whenever you see this daily spread that looks like this, it's likely that this is going to move lower. Where likely to, if we're looking at a sell side spread that looks like this, closing at lows into the bottom of this wick, it's likely going to happen into the bottom of this bull gap. And then from there, you're going to find your gap up and then potentially a higher low, because this is where the heavier intention is from, back to what we talk about volume, right? This is the volume. This is where all the volume and intention is from, considering this volume on the chart, followed by lower low. But we get a spread closing near that low, so effort versus result tells us that effort wasn't huge here, followed by the wick off this spot that resulted in a lower high. So this whole portion of price here, where you're putting in a higher low wick, followed by a lower high off of a bear gap progression, this is likely going to go for now a new lower low within the heavier intention bull gap, meaning this spot. So whenever you're looking at this, you could say, okay, it's from this spot to all the way up here. So lower low from this spot. Whenever we start finding that, we find a buyer, and then that buyer fails, followed by an inside bar. Inside bar brings a new lower low, all into still the heavier picture of where we are moving from, which is this. And then you start finding your buyer. That buyer starts bringing in a really strong tape. Okay, we create an external resistance. We start basing. What do we notice about this base? Well, it's a lower high, but it's a lower high shallow to the imbalance off of this spot. We did sweep the previous day high and capitulate off of it, but this is all filling that really nice heavy volume bull gap. And then we get a really strong tape, consolidation in the close, gap up. That's really healthy, holding a previous resistance, and then we start failing the previous day high of the resistance that was trying to hold into a support. We start filling the bear gaps, right? But the wider perspective is the bull gap on really heavy volume. And then you start finding higher low, and then a rate of that higher low. But this is still higher low structure. If you want to go to the hourly, you can. Higher low, and then higher low. And all of these mornings were strong tapes, followed by sells, followed by higher lows. And then the next following day or next 2 days was a really nice higher low into expansion, all into a resistance. But whenever you're looking at higher low after higher low after higher low after higher low off of the heavy volume intention gap up, you could start saying to yourself, I'm going to catch the next higher low and really start catching the expansion, if we never saw it yet, into a spot where supply would be more vulnerable to catch a short from. Do you think supply is vulnerable from here? We saw capitulation off the open, followed by higher lows and higher lows and higher lows off of the heavy volume intention earnings candle, followed by the fill of the bull gap and a base on that day, and then a strong tape, higher low, strong tape, sell side tape, and then strong tape. Right, it's eventually going to see the expansion into spots where you're getting the flat top resistance above you if the internal resistance beneath the flat top resistance isn't strong enough, right? Meaning this spot compared to this spot. Okay, so all we're really looking for is higher lows to follow through with the price and the expansion and move back up into like where you would find more supply off of. So this was a really nice win. I grabbed calls right off the open over here and then took them all the way up into here. I shared that in my Discord with the students live, but I don't really care about that. I'm just more or less talking about my thesis here. Now we can go into DraftKings short. So I've been talking about this one short for a very long time. Let's go back to the effort versus result standpoint here. So preliminary resistance, gap up or move higher, really heavy liquidation sell side candle, and then from there lower high, lower high, lower high. This was heavy liquidation again, right? Because of the really heavy volume. So whenever you see the draw in the inside bar after inside bar after inside bar after inside, 7 inside bars within a major sell side imbalance, major sell side liquidation candle, if we swipe that and we start failing, and then we start failing the overnight gaps, retesting into them, and then we start failing, that's bull progression lost, and we start breaking beneath higher lows. This is what I mean by this. This is all just a move higher that is pushing into where a heavier seller is from, and then you start losing the lower highs, represented by the red candle. Then likely, guys, what I'm looking for is lower high, lower high, lower high, lower high, lower high, heavy distribution candle, lower high, and then higher high, failure, lower high, lower high. So this is all from a wider perspective of things. This trend right here, guys, was all price covered over time from a bull's perspective, from a buyer's perspective that was weaker because it was all just pushing back into where sellers were a lot more active from, meaning this candle over here on March 27th into the lower highs afterwards, lower highs, and where this is really pushing into is just a lower high on the daily chart. So this is structure within structure. This is higher lows, but all these higher lows are just covering price from where the distribution from the top heavy spot is coming from, meaning heavy volume liquidation, and then lower high, and then lower high. All the heavier spread candles and heavier volume candles are coming off the sell side candles that make a lot of sense, and you're just getting lower highs after lower highs after lower highs from the daily chart. We start breaking the structure of these momentarily, these being higher lows, and then kind of like retests in between, and failure after failure after failure. So whenever you're going into the 5, you can take a look and go, oh my gosh, okay, this is failing, failing, failing. Where to though? Probably the bottom of the support. So like the $40 level or beneath, being down here. So whenever I don't see a heavy volume or like a really heavy buyer over here, I'm looking for the bottom, right? The bottom being kind of like just a major higher time frame pivot. If you want to go to the hourly, you can. Yeah. And funny enough, that's where we get news from. I start looking for a short for a draw down into here at least. Just start trimming profits. I start trimming profits, and then this starts running like almost 100% position on bi-weeklies down into here. Very beautiful chart. Now, I am red on some Nike calls. I don't necessarily know how these are going to go, but what this really looks like is the gap down charts have been favorable moves. Now, this is an inside bar, and then what I saw intraday was, okay, we swept the previous day low, and then we started finding a buyer off of that, and then the market overall just started bleeding it at the current time. So it was a little bit bad timing, and I knew this was micro distribution, just considering the seller that was incrementally stepping in as we moved our way higher. But it was just a little bit bad timing with Nike, so I guess we'll see with that one. But that's the DraftKings short focus setup that I've been explaining. And the Tesla and ENPH thesis that I've been looking at for quite some time now. So I guess we'll see how it plays out. These are some names that are a little bit speculative in terms of like high short interest and like just a name that's been underperforming, that we don't necessarily know where its next move is going to be at. So I guess only time will tell, but catching the short-term move can make your week, your month, your year, and looking at the the rotations momentarily can be very beneficial for, like I said, your week's profit, your month's profit, your quarter's profit even. If you hold a lot of conviction to what you're seeing in names like some of these solar names, and I've been talking about the solar names for a very long time, guys. So there's clearly something in the chart that we've been seeing. It just takes a lot of patience and time to be able to see that chart play out for itself and finally start getting a grasp on that signal that you're seeing in the chart. So that's really all it's about, guys. It's about seeing price covered over time and effort versus result, waiting through patience. If you guys have any questions about these 3 charts, then please let me know. DraftKings, ENPH, and Tesla have been doing really well for me on the week and within the past couple weeks. So yeah, let me know if you guys have any questions, and that's it.